Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1482A, and today's date is January 26, 2018, and the title of the episode is Alarm Bells Are Going Off, Market Meltdown Dead Ahead. Let's get into the economic collapse financial news. Now, we've been talking a lot about cryptocurrency over the past couple of reports, and we know that it's decentralized. We know the central bankers, they definitely do not want this. And they're pushing their agenda to create laws to try to control. That's their main agenda. And don't get me wrong, I like cryptocurrencies. I think they're fantastic. And because the blockchain system is so decentralized, it's very, very difficult to hack a decentralized type of system. But hackers, they can go to the exchanges, which is very interesting because this is not really part of the blockchain system. These are like nodes outside that are accessing the blockchain where you can store your Bitcoin, you can store your Dash, you can store your Litecoin, you can store any of these different things there, and you can also cash out and you can hold your cryptocurrency there. And what's very interesting about this, there's many different exchanges. There's Bittrex, there's Coinbase, there's Kraken. In Japan, there was one called CoinCheck. And they halted withdrawals of funds in cryptos because it looks like they were hacked. And it looks like they stole around something like $400 million worth of Japanese cryptocurrency. And they just took it out of there. And we can see right now that this is going to be a problem. Now, this is no different than someone coming in and robbing a bank or hacking into a banking system and stealing the currency there. Now, once again, the central bankers, the governments, they want regulations. They want to create law. They want to create laws so they can protect you from this. And again, we've heard crimes in the past where there's those people that have stolen from the stock market, that have stolen from the banking system. It's all exactly the same. And these regulations really don't stop a criminal from getting in and stealing something. The regulations, well, they control what they want to control. It doesn't stop anything. It's like creating laws and saying, listen, you shall not kill, you shall not rob, you shouldn't do any of these things. It doesn't mean that people aren't going to do it just because you have laws, just because you have regulations. If we create terrorist laws, it doesn't stop a terrorist. So we can see that that whole thing is completely ridiculous. But what we're seeing here is that they want to regulate now, most likely the exchanges. And CoinCheck is a very well-known exchange in Japan. And we can see that they were hacked into. A lot of money was completely taken from it. And people are sitting there going, oh my God, what am I going to do? And once again, this is all about control. And I do believe that this most likely was planned. Here in the U.S., we see the economy is still falling apart. Now, we know that Mnuchin, he tried to bring down the economy. Not him himself, but all those individuals behind him. I don't believe he's part of the Trump administration. I believe he's part of the central banking system. He's a Goldman Sachs boy. And it looks like they tried to make a move to try to bring down the system. And it was blocked. As we can see, Trump came out and said, no, we're not weakening the dollar. That's not our new policy. The dollar is going to be strong because Trump wants the narrative and wants to keep the narrative and wants to control the entire system when it does come down so he can blame this on the central banks. But what we're seeing here in the United States is that core durable goods, they have completely tumbled. Now, I know the corporate media is out there saying, wow, core durable goods are up because of aircraft orders and war spending, and it looks great. But if you remove that, because we need to understand, war spending and aircraft orders, it helps a little bit, but doesn't help the everyday person, doesn't help many of the stores, the manufacturers, doesn't really help that much. If you remove all that, core durable goods, that it dropped by 0.3%. And core durable goods is like washing machines, the big ticket items, and that completely fell. And it looks like this is the most in 12 months. So at the core, orders tumbled most in a year. Now we look at the GDP. Now they were expecting the GDP to come in around something like 4%. Then they said, okay, maybe it'll come around 3%. It came in around 2.6%. This is the lowest since the first quarter of 2017. When Obama, he couldn't, get the GDP above 3% until they manipulated it a lot, revised the numbers, exported soy products and things like that, just to push the GDP up to that point where he can say, see, I had a quarter that was 3%. But when we look at this and we look at the numbers and we dig a little bit deeper, we can see that, not everything is as good as it seems. I mean, everyone's going to be out there saying, wow, 2.6%, that's not bad. That's pretty close to 3%. But this number has a major caveat. Much of it was the result of a surge in credit card funded spending, while the personal savings rate dropped to levels last seen during the financial crisis. 13-week annualized credit card balances in the U.S. had gone completely vertical in the last few months of 2017. So let's think about this thing. We know before we reported on the credit cards moving up, and there was a report out there saying a lot of people were using their credit cards to purchase Bitcoin. The corporate media played this up, and it was, continually pushed to the American people over and over and over, saying, oh, look how high Bitcoin's going, look how high Bitcoin's going, you can make a lot of money. And if you notice, a lot of people, they know what Bitcoin is. Doesn't mean they're involved, but they know what it is. So people said, you know what, I'll use my credit cards and I'll purchase Bitcoin, and I'll make a lot of money. I'll be able to pay off the credit card, and this will be great. And that's why most likely we saw a credit card surge. We also saw it because most of the individuals out there, they don't have high-paying jobs. Many people lost their jobs, and they were using credit cards for the holiday season, even though the holiday season wasn't as great as everyone has said. Now, when we look at this, we can see that, yes, it has gone vertical in the last few months of 2017, and most likely this is the reason why. Now, even more troubling was the ongoing collapse in the U.S. personal savings rate, which last month tumbled to the lowest level since the financial crisis because U.S. consumers drained what little of their savings they had, and they spent it most likely during the holiday season, maybe even on Bitcoin. And former Merrill chief economist described what is going on as the twilight zone economy for the following reason. How many times in the past have we seen a 2.6% savings rate coincide with a 4.1% jobless rate? How about never? It doesn't even make sense. The savings rate fell from 3.3% to 2.6%. If it had stayed the same, the real PCE would have been 0.8% instead of 3.8%, and GDP would have been 0.6% instead of 2.6%. Now, what's very interesting is that during the fourth quarter, the GDP number they're saying is 2.6%. It will be revised again and again and again. But this is when we had a booming stock market, massive post-hurricane repair and rebuild, a consumer credit card binge, and this is the highest GDP we can get out of all of that? The reason for this is that it's completely made up. It's an illusion. That's why it doesn't make sense. This is why we have a 2.6% savings rate with a 4.1% jobless rate. I mean, think about that for a second. What kind of jobs do people have then? Is this real? Or are many people out of work and many people have part-time jobs? And this is why we see tax receipts continually falling. Because when people lose their jobs, like yesterday we talked about the retail industry, 100,000 jobs are going to be lost, which means that this most likely will not be counted in the unemployment numbers unless they're full-time jobs, unless they meet certain requirements like 30 hours a week and they got paid a certain amount. But these people who are working in these part-time jobs, they were counted as full-time jobs. But when they lose the job, they won't be counted because they didn't meet those requirements. They're skewing the numbers. So most likely the unemployment number will go down to 4% or maybe even 3.9%. But we know 100,000 people lost their job. Something doesn't make sense. And again, what we're seeing is that we have rising bond yields, full employment, Fed tightening, trade frictions, weak dollar, rising twin deficits, spurred by tax reform. Does all this sound familiar? This is what happened in 1987. And what happened during that period of time? Well, the market completely crashed. Again, today, they have the ability to keep it all up and running. They've learned from their past mistakes. They understand this. Right now, Trump most likely is controlling the stock market. The Fed, I think they want to crash the market and blame it on Trump. He's been in there for a year. I think they're going to make another move. I think they're going to try once again. And the reason why the market has been kept up, and we mentioned this before, is the Swiss National Bank. Now, $11,589. Why is this number important? Well, that's the U.S. dollar amount of American stocks the Swiss National Bank owns on behalf of every man, woman, and child in Switzerland. The central bank has taken on itself to expand its balance sheet and invest in the proceeds, not in gold, nor sovereign debt, not even corporate bonds. Nope, they decided to take the money and invest that money in another country's most risky part of the capital structure, equity. Does this make any sense whatsoever? And don't think it's a small number. It's almost 100 billion US dollars. This is unbelievable. Why would a country take 100 billion and put it into the stock market? And this is the people's money. I mean, you can see how crazy this is. And the real problem is that the central bank just monetized their balance sheet against another country's equity market. The Swiss National Bank has gone down a rabbit hole. And when everything starts to fall apart, guess what? They're going to lose. The people are going to lose. So we can see right now, they've been keeping the market up by having the central banks purchase, by pushing buttons. Has nothing to do with corporate revenue, has nothing to do with how much sales the corporations have, has nothing to do with any of that. It's one gigantic illusion. Now, Bank of America is out there, and they're saying there's an imminent market crash headed our way. And they said their indicator was just triggered. And what they're saying is that their bull and bear indicator surged to 7.9, the highest since the last sell signal of 8 triggered March 13th. And they're saying there's going to be a tactical pullback, most likely in February and March. Very likely. And we're going to see the market come down. Now, once again, is this going to be the opportunity where Trump says, okay, let's let the market go instead of hitting the button and having the Swiss National Bank purchase more stocks? Or is the central bank going to say, let's let this whole thing go and let's bring it all down? Now remember, Trump still has control of the stock market. He's the one who is continually pushing this up and up and up. The central bank, they have the power to purchase stocks to drive the market up. So Trump has the plunge protection team, the high frequency trading. He can keep the market rising, and the central bank can say to the Swiss National Bank, okay, it's time to cut it. That means Trump would have to do, major type of manipulation to get the market up, and they could bring it down. And we can see right now, this is where we're headed. And I think what's going to happen come February, March, moving forward, is that we're going to see this battle between Trump and the central bank. And the central bank already signaled they want to bring this down because they want to blame it on Trump. Trump already signaled that he's not ready. The transition, the full control of the government, he does not have this as of yet. He's getting there. The people that are working with him, they're getting there, but full control they do not have. So we can see right now the central bank, though, is looking at this and saying we are ready to bring this down. They already signaled it with Mnuchin coming out and saying we're going to have a weak dollar policy, where then Trump quickly corrected this. But we see right now they're going to try another tactic. Another tactic might be the Swiss National Bank saying, okay, now it's time to start selling. Maybe this is why Bank of America is reading this indicator, where they're saying now they're going to be a selling. We also have the pension funds during the same type of period where they're going to start selling. So the central bank might have ammo right now to bring down the economy. And Trump will have a very difficult time to try to keep it from collapsing right now, because I don't believe he's prepared and ready for this system to come down as of yet. But the central banks, we need to remember, they don't care. They don't care if people suffer. They don't care if people lose everything, because they're always okay. The people that support the central bank, they're always okay. They're ready to short everything. And we can see that this is going to be a heated period of time, and things are going to get really, really crazy in the next couple of months. And we're going to be looking at different indicators and signs to see what is going on here. But I would expect, if they're reading this right now, that something big is going to happen, because I can see right now it's almost like a perfect storm that they created and is headed our way, where they can do this easily by cutting the funding of the purchasing of stocks. The pensions are going to sell off, and the market's going to come down maybe 20%, 30%, whatever it is. And we'll have to see what Trump does at that time. But we can see right now they are ready to go. It's go time. And they're ready to pull the plug, and they're ready to blame this all on the Trump administration. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.